Okay, time and time again, guys, in the comments, in Discord, YouTube, everywhere, people keep asking me, how do you short the crypto market? Shorting the crypto market, guys, it's not as easy as you think. Everybody would love to catch a move like that, and anybody that did catch a move like that would have a decent profit on the back of that. However, I will show you how to short the crypto market, guys, on the one condition. You do not go and put your money on this type of trade until you go back and you backtest this trade, backtest it against your pair, against your time frame, against your analysis, and you need to interpret this. You need to interpret it, otherwise it's not going to work. You need to interpret it and find out how profitable this is before you even open the doors, guys. 90% of traders, and this is a fact, 90% of traders lose 90% of their capital within their first 90 days. How can you be one of the 10%, guys? You can be one of the 10% by actually understanding exactly what it is that you're getting into, making sure that you've got high probability moves, make sure that you interpret your strategy correctly and it's rule based. And then, guys, once you've done that and you know exactly how profitable the strategy is, if it's profitable, then go and forward test it. Go and put real money on there, guys, but put the work in first. Otherwise, you're not going to be able to interpret it properly. You're going to be one of the 90% that lose 90% of their capital within the first 90 days. So that is some real bad statistics, guys. That is some hard statistics. But if you do want to be a trader, if you do want to make money within trading, and you do want to get yourself an edge, you need to look at these high probability moves. So we're going to go over a shorting strategy in this video. Let's dive in. So what we're going to do is we're going to start with a blank canvas, guys. This is going to be educational. I'm going to tell you from a psychological perspective why these things work, what to look out for, and how you can make this trade a high probability move. You need to split it between two time frames. What are your time frame? You need to ask yourself that question, guys. How often can you be at the charts? Have you got a full-time job? Can you be at the charts once a week, once a month, once an hour? You need to ask yourself this, because then you can interpret exactly what type of trader you can be within what type of time frame, and that'll give you the biggest edge, guys. You need to ask yourself that question first. So the reason you need to ask yourself that question is you need two time frames, a minimum of two time frames. One's going to be your higher time frame bias. Why do we need that? Because it gives us an indication of trend. Remember, we're following trend, and the higher time frame is going to give us an indication what is the actual trend on the higher time frame. Then you go into your trading time frame, guys. So what we're going to do is just an example. We're going to use the 4 hour and we're going to use the 1 hour. 1 hour will be the trading time frame. 4 hour is going to be the higher time frame bias. Now, because it's a shorting strategy, what's happening with the short, guys? You're putting in lower lows, you're putting in lower highs, you're putting in lower lows, you're putting in lower highs, lower lows, lower highs, like that. Simple. Okay. Now, anybody that knows me knows what type of a trader I am. Support and resistance is key, guys. Once you're building your support and once you're building resistance, then you can understand and identify what's happening at that resistance, what's happening at that support. You can get clues within candlesticks, you can get clues within indicators to tell you exactly whether you can protect yourself, whether you can preserve your capital, and what your risk to reward is going to be at any given time. So easy, right? Where do you short? Do you short here? Do you short here? Do you short here? That's hindsight, guys. You don't know. That is going to be the local top as far as the lower high is going to be. So we got our support and resistance built in. You've got your support, your resistance, sorry. And then you've got support down here. Once the support's dropped, what happens? Comes back down, falls as resistance. Exactly the same thing happens here. What was previous support becomes resistance. So what we're going to do, you've got your support built in, you've got your resistance built in, but what we're going to do is we're going to zoom out and simplify things even a little bit more, and we're going to apply what we call a kill zone, an area of interest. Now, this is going to be the important thing, guys, and this is still in the 4 hour, this is still in the higher time frame. So in the higher time frame, we're identifying our kill zone. How do you do this? What you do, guys, you're putting in a lower high and you're putting in a lower low. You're going to take the lower high and the lower low, and you're going to put them together. That is going to create your area of interest. Why is this significant, and how can you use this to your advantage? Because we know that when the trend's reversed, this happens. Price comes above, takes out the previous lower high, and then puts in a higher low, a higher high, and then a higher low, and continues to the upside. If that happens, you don't want to be taking the trade. So how can you identify within this area here? How can you identify within this area here that that is going to be the lower high, and there's a high probability of continuation to the downside? That's where you go in to the lower time frame, and that's where you're looking for a reversal pattern. Now, The reversal pattern that I look for, one of my favorite reversal patterns is this. There's your resistance line. That's where price actions hit. Let's get some candles on. You've got your candle that's pushed all the way up to resistance. So that's going to be a green candle in this instance. Stick a green candle on there. You've got the green candle that's pushed up to resistance. This is where I'm interested, guys. Remember, I'm interested at resistance. I'm interested at support. So there's a resistance point. We've hit a resistance point. You'll quite often see a wick to the upside that gets rejected and pushed back down. Then what you'll see is, and this is the clue, guys. Remember, this is the hourly. So we were looking on the 4-hour to identify our kill zone, to identify our trend. Now we're going into the hourly to identify what's happening in the smaller time frame at these resistance levels to give us an indication when to actually enter the trade and understand what the risk to reward is going to be. So the next candle, you see this time and time again, guys, at these reversals, at these rejection points, you see these doji candles. So what does a doji candle represent, guys? It represents indecision. The bulls have pushed price above the resistance level and then it's closed below the resistance level. That means that on the close, guys, the bulls haven't managed to regain enough momentum to push price through that resistance point. That's given us another clue. You've got one clue here, one clue here. Now, this is my main signal for a short. This is a lower low, lower close candle. Make that red for bearish. That is a lower low, lower close candle, guys. And what that represents is at this point, the bears have completely regained control because this has engulfed the extreme low, including the wick, the previous candle. The bears at this point have got control. You'll often see something like this, guys, a 50% back and then a continuation to the downside. So it's important for me that I take it on the candle close. Why is that important? Because we don't know at any point whether the candle is going to push back up, push back down. So the close is important. And once you've got the close, that's my reason for entry. The next thing that I'm going to do, guys, so this is all happening within this level here. This is giving us an indication within the shorter time frame. This is telling us that we've got a 3-bar reversal. That helps us identify one thing. We can preserve our capital by putting our stop loss above here, because this is where you know when you're going to be wrong. This is when you know you're going to be wrong. So if you're taking it here, you're going to be wrong up here. You're going to be wrong if it breaches through that resistance point, and you want to be wrong if it breaches through that resistance point. People think that losing's bad, guys. If you can lose and preserve the limited amount of capital possible, trust me, the reward will look after itself. Now, the reward, there is a rule here, guys, minimum of 2-to-1 risk to reward. I need a minimum of 2-to-1 risk to reward. Otherwise, I'm not even prepared to take the trade. So that's another rule that needs to be met. So if we use that example down here, guys, we know that the 3-bar reversals happened within this area here. And we know that this is going to be the high. We know that we're going to be wrong if it breaches this high. And we know that we're shooting for one thing. Well, I know we're shooting for one thing. I haven't told you yet, but I'm about to. So you're taking it here, guys. You're protecting yourself above here. We need a 2-to-1 minimum of risk to reward. But where am I shooting for, guys? I'm shooting for here. Shooting for this previous lower low. Why am I shooting for the previous lower low? Because it's high probability, guys. If the trend reversed at this point and then continued to the upside, you're still in profit, guys. If you're waiting for a continuation of trend, that continuation of trend has got a lower probability of happening. This is where the resistance always is, guys, at the lower lows, at the lower highs. So if you're shooting for the lower low and you've got a minimum of 2-to-1 risk to reward, you've protected yourself with a high probability move because you've got a 3-bar reversal at resistance. You know when you're wrong, you've got that minimum of 2-to-1 risk to reward, and you keep doing that continuously over a period of time and over a period of time, guys. Then you can go and back test it and find out exactly how many times it works, what's your your risk to reward, what's your win rate, and then you can actually understand exactly how profitable you're going to be before you open the doors of trading, guys. So if you did find this useful, let me know in the comments what you want me to cover next, guys. We'll go through some real-time examples of these. Get yourself in the Discord group. We talk about all these kind of things in there, all the alphas in there, and there's lots of people with the same views and the same beliefs and the same interests as you. So it's completely free. It's in the link below. I'll see you in the next one.